This is your technical update from the LMAX Exchange Research and Analytics Desk for Friday, January 30th, 2015. Euro dollar. So the euro continues to extend its recovery out from the early Monday 11-year low at 10.98, with the market trading back into the 11300s thus far. We've been mostly consolidating within Tuesday's ranges, and the key levels to now watch above and below come in at 1460 above and 1098 below. A break above 1460 would open the door for a little bit more of a correction, but ultimately a lower top is sought out in favor of a bearish resumption somewhere below the 1680 area, and only back above the 50-day moving average, which comes in all the way up at 120.58, 120.60, would compromise the bearish outlook. Sterling dollar. So cable's been locked in a bit of a consolidation above recent 2015 lows at 149.51, and clearly a break above 52.70 or back below 49.51 will be required for the next key directional bias. A break above 52.70 would take the immediate pressure off the downside and expose 54.85 further up, while back below 149.51 would open the door for a test of the 2013 base at 148.13. Dollar yen. Dollar yen hasn't been doing much of late and remains locked in a consolidation, although the overriding trend continues to be intensely bullish, and this bullish consolidation is expected to be broken in favor of a retest and break of the 7-year high from December at 121.85 and towards 125 further up. Ultimately, only back below 115.55, the low that we saw on the 16th of December, would delay the immediate bullish outlook. Euro Swiss. So Euro Swiss has been in the process of recovering after a post-SNB shock range between 97.10 and 102.50. The break this week above 102.50 opens the door for a measured move into the 107 area over the coming sessions. At this point, any setback should be very well supported above that previous resistance at 102.50. Aussie dollar. Aussie dollar has extended declines to another multi-month low and a fresh multi-year low down towards the key next objective at 77. The market had broken down below psychological barriers at 80 to expose 77, and once this level is tested, there is risk for a bit of a bounce to allow for oversold daily studies to unwind, but ultimately the trajectory and the trend continues to be focused on the downside, with any rally seen as lower tops ahead of bearish continuation. Look for the 80 area to now act as a formidable previous support now turn resistance zone. Dollar CAD. Dollar CAD continues with its intense uptrend, with the market at plus 5-year highs, trading all the way up through 125, through 126, and towards 127 thus far. But daily studies are highly overbought, and there is risk over the short term for a bit of a correction back towards the 10-day moving average, which currently comes in around the 123.85 area, before this market looks to establish any meaningful gains from here. Kiwi dollar. Kiwi has broken down to fresh multi-year lows, with the market trading down below 76.09 in recent days to open this acceleration to the downside and put the focus on a measured move objective at 72. The market had been consolidating for several weeks in a 400-point range between 76 and 80 roughly, and so the break below 76 has opened this move towards 72. But daily studies are a little bit oversold, so there is risk over the coming sessions for a bit of a bounce in favor of a correction and lower top. SPX 500. The S&P 500 continues to show signs of the potential for a major top after the market has continually stalled out ahead of the record highs that we saw at 2100 or just shy of 2100 back in late December. A break below 1968 would now be required to confirm this bearish outlook and this topish structure, and it would expose a retest of the October 1820 lows further down. Gold. So we've seen quite a pullback in gold over the past 24 hours, with the market trading from recent highs of 1307 all the way back down to the 1250 area. But this 1250 area, as you can see here, acts as now formidable previous resistance turn support after the market had broken out from 1256 a few days back, which had been that previous resistance going back to October of 2014. So expect to see some good support into this area in favor of a higher low, and ultimately a resumption towards the next key resistance at 1345. Really only back below 1217 would compromise this bullish outlook. That's all for now.